But I think the real issue here that the next government has to address is growth for the most part in the last few years has been driven by one engine, which is consumption. And when you have a car riding on one engine, at some point that engine gets exhausted. And we're seeing that both rural and urban consumption have begun to slow over the last year. I think the challenge before the government is two things. One is to fix some of the plumbing. Well, because there's no space for an easy fiscal stimulus or monetary stimulus. I would argue, given India's fiscal deficit, there's no space at all for any stimulus in the July budget. And there are limits to how much monetary easing we can do, given the 4% inflation target.
You don't expect the RBI to ease further?
We do expect perhaps one more rate cut, but what we're seeing is those rate cuts are not being transmitted. So I think what authorities need to do is focus on the plumbing. One of it is ensuring you get better transmission in the bond market, within banks and within NBFCs. I believe we need a more systematic way of resolving tighter financial conditions in the NBFC sector, the shadow banking sector, which has been a big driver of financing urban consumption. I think we need to do something to balm the rural distress, but most of all, I think we need to ensure that the conditions for the next private investment cycle over the next 12, 18 months fall into place. Because
so how will they fall into place? So you'll help corporates by cutting rates, 75 basis points already done. You're saying another 25 coming online, and that would mean 1 full percentage point of rate cuts. You're talking about easing liquidity in the environment, and also the government helping with more fiscal spending?
I don't think there's much space for fiscal spending. The good news is, under the radar, capacity utilization in the corporate sector is at a 6-year high. So if we can arrest this growth slowdown, I would argue, just given utilization numbers, the trajectory over the next couple of years, corporates will be in a place that is ready to invest in the next year or two. The question is, will they have the financial space to do so? So my prescription actually is exactly the opposite. I think today RBI has cut rates, but the 10-year bond yield is exceptionally high. There's a very steep yield curve, in part because of fiscal dominance or the fiscal overhang. So my prescription is the government should actually focus on a credible budget, focus on reducing the fiscal overhang from the economy. What that does is open up some financing space for corporates, bring bond yields down, allow better monetary transmission, and thereby set the conditions for the next capex cycle. Otherwise, what we're going to have is, at the first hint of private investment, either interest rates go up even further, which will result in some crowding out, or Indian corporates will have to finance this investment cycle largely through foreign savings, which creates its own set of external vulnerabilities.
Hi, I'm Emily Tan, and thanks for watching CNBC. You can check out more of our videos by clicking on the boxes on the screen, and don't forget to subscribe to the channel for more. Thanks for watching.